Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.
We're talking about the importance of institutional adoption in the crypto space with David Olsson. He is the global head of institutional distribution at BlockFi. Welcome to the show.
Thanks, David. Great to be here. Kitco is a great outlet, and I've followed Kitco over the years.
Thank you. Appreciate your comments. You've worked in traditional finance before, and we'll talk about your transition into the crypto space because I find that personally interesting. But first, I want to talk about what you think is going to drive prices for Bitcoin and the altcoin space to the next level. By next level, I mean, look, we've already had a big bull run. It's been flattening. It's been trending down since November. Bitcoin, as you know, has been trading like a tech stock. It's followed the NASDAQ very closely, just with a higher beta. So now investors from all levels are wondering, when is the next price move up and what's going to cause it to move up?
Sure, obviously that's very top of mind, I think, for everybody in crypto markets. Right. I can't give advice specifically, but I can give some market color in terms of what we're seeing. So there's two things that I would highlight, or actually three things. One is interest rates. Obviously, interest rate expectations have increased. Crypto has been trading like a tech stock because traditional asset managers view it as very closely correlated to tech. So in the short term, there's some bearish sentiment as some of those asset managers rotate out of crypto. I think there's underlying though that there's a long-term fundamental theme of crypto being a protection against monetary inflation. That's why Bitcoin was created. So I think the long-term trend is still bullish. Certainly, BlockFi is still bullish on crypto, as is everyone else in this space. I think the other thing that I would say is that a lot of the offshore exchanges in particular have not adopted the kinds of practices that institutions would like to see for them to participate. And that's where the majority of the volume is. So that's things, the 3 C's that I call them. So cybersecurity, compliance, which is AML, KYC, and then capital and financial transparency. So having audited financials and things like that. Now they're starting to adopt those things in that institutional infrastructure. Why? Because retail involvement has peaked for the short term, volumes have come off. They want a new wave of investment and something new to drive their businesses. BlockFi has already and always had those things, and we see ourselves as a leader in that space, and we welcome the fact that other firms are following in our footsteps to some degree. But I think that new framework for some of these places where a lot of the trading occurs will allow institutions to participate and therefore price action to perform well as a new wall of money comes into the space. Okay.
Everybody here I've talked to is bullish, so you know what? I'm going to play the devil's advocate here. I'm going to give you a few bearish scenarios, and I'd just like you to comment on whether or not you agree or disagree, and if you disagree, why you think I'm wrong, all right? So first of all, we've seen cryptos, in particular Bitcoin, trading, like I mentioned, like a tech stock, very closely with the NASDAQ. That implies to me that institutional investors are trading it like a tech stock. I mean, the price movement has basically shown that. And so traditionally in the past, when interest rates have risen, we've seen capital flow outside or away from risk assets, away from high beta stocks like the tech sector, into more defensive sectors or perhaps safe haven assets like gold and treasuries. So that could happen again. Until we see that decoupling away from tech, Bitcoin is going to continue trading like a risk asset. Interest rates will basically wipe out valuations this year. That's bear case scenario number one. Scenario number two, like you said, the retail adoption has already happened. Institutional adoption right now is looking for safety because of all the geopolitical risks. So we're not going to see that wall of money come in until we see a resolution in the war in Ukraine, until we see stability in inflation, until we see stability in the Federal Reserve and other central banks. How would you respond to these two bearish scenarios?
Sure. I'd say on the number one scenario is that there is a generational component here, in that younger people look to cryptocurrencies as their safe haven. Not necessarily, I think, to precious metals or to treasuries. Where can they go easiest? They open up an app like BlockFi or others, and then they can buy cryptocurrency.
But those are the retailers, right? Those are the Robinhooders.
Those are the Robinhood, yeah, correct, and BlockFiers. Those, so, as we like to call them.
Yeah.
So yes, that's a retail component, but it's important because right now probably 90% of crypto markets are retail participation. So actually retail flows are quite important. I think, and then in terms of institutional, yes, maybe there's some short-term bearishness, but eventually they need returns. Everyone needs returns that are not greater than zero. Obviously, interest rates rising to 2-3%, presents a challenge. But I would posit that 2-3%, according to some studies that I've seen from Credit Suisse and other banks, doesn't represent a significant challenge in the long term to tech. So we can remember the tech bubble in the late 90s and 2000, where interest rates were 5-6%, and obviously tech did very well during that period. So historically, it doesn't really add up. Then interest rates around 2 or 3% would continue to be very negative for tech related.
It was just curious to me to witness how the prices have moved during the invasion of Ukraine. Gold has moved up. Well, gold is already moving up. Yeah. You saw the dollar move up. So traditional risk-off assets have done well during heightened geopolitical tensions. Not so much cryptos this time. Do you have a reason as to why?
I think, in my view, crypto has held up somewhat well. It's done. It's actually done pretty well if you look at it over a longer time horizon. So gold, if you look back, so I had a conversation recently with a friend who's a gold bug. He said, I bought gold 18 months ago expecting that it would rally. It's done nothing until very recently. I said, yes, you missed. The trend was the fact that so many investors were going into Bitcoin as a replacement for gold. So Bitcoin still over that period has outperformed gold and other precious metals.
I'm just talking about recent geopolitical tensions. Suppose there were another COVID or another war down the line, or there's always going to be wars. There's always going to be high geopolitical pressures. Are we going to see capital flow into cryptos the next time?
I think you'll see capital flows into certain cryptos. I think there's always an initial, and if you look at historically, there's usually an initial kind of reaction, negative reaction.
I'm not talking about stable coins tied to the US dollar. I'm talking about like other things, yeah.
Yeah, absolutely. I think there's always an initial negative reaction, and then the price usually recovers. But I think, again, there's a long-term growth story. We're at 2 trillion AUM in crypto. Gold, which I think at this point is, can be considered on the part of crypto heads like myself to be less and less important as an asset class, given the digitalization of the global economy, is at 10 trillion. So you say, what would I rather be invested in long term for the type of returns that I can get? I'd rather be invested in crypto, which seems to have so many different applications. So it has applications, obviously, in financial services, borrow lending, derivatives, Web3, NFTs. There's a million different applications for crypto and the blockchain. So I think that's where the smart money is going, because they know that the returns long term are compelling.
Those all sound like just tech plays. So, smart money that's interested, I guess, in technological improvements or developments.
Yeah, and there are some cryptos like Bitcoin is the predominant one that has a status as a reserve asset because of its limited supply. So the argument is obviously that there's only 21 million Bitcoin that can ever be issued. Gold in the ground, there's more of it than we know what to do with.
So you've argued that a wall of institutional money is going to drive up the next bull market. What is the impetus for this money to come in?
So as we were discussing before, I think it's institutional grade infrastructure. A lot of the institutions are not familiar with some of the service providers. Crypto's much different. There's different custodians in crypto. So for example, in the traditional world, you might think of Boni, State Street, JP Morgan. In crypto, we have different players that are the large custodians. So it takes time for these institutional players to get to know them, to do their due diligence, and then engage the capital to be able to move forward. But we've seen that over the last year from all the big institutions that we're talking to. About 80% of the top 50 hedge funds are launching a crypto strategy in the next year.
80% of the top 50 hedge funds
that we've talked to, yes, are launching a crypto strategy. So, but it takes a long time. Even hedge funds, which are on the forefront of risk-taking across the institutional world, are still very cautious when it comes to deploying new strategies because they have pension fund investors and they need to be fiduciaries. So they're doing the hard work behind the scenes of due diligence, finding out who the credible service providers are.
Why don't they open up completely different funds separate from their pension?
So some of them do. Some of them do open new funds, and some of them are actually investing in crypto native hedge fund managers who are the 25 and 30-year-olds that are deploying assets and capturing alpha in the market. And some of them are doing it on their own balance sheets or off of their own name. But to date, it's predominantly been, let's find out about the space, let's allocate some capital to people who are already in it, and then expand what we're doing from there.
All right. Well, okay. Institutional adoption needs to happen, and you've argued for why it could happen. I'm just curious as to what's going to happen on the retail side then. Are they going to, has the money already been deployed, do you think?
I think
there's always going to be new retail investors down the line, but in terms of the growth that we're seeing from the current population, what is the percentage of, let's say, millennials or Gen Zs who are interested in the space? How much capital has already been deployed?
So there's a statistic that I read that there's about 30 million people in the US that own crypto.
Yeah,
so from
30, 40 million people, depending on the set, yeah.
Yeah, so that's about 10% of the population. That indicates there's room to run. You're seeing new platforms almost every day come out, like a PayPal or Robinhood or others, adding crypto to the products that they offer. I think the next step will be crypto products, for example, in IRAs or 401ks, more crypto funds. Hopefully the SEC approves an ETF at some point, and that'll give people a lot more access.
Yeah, people have been talking about that for 2 years.
I know. So we'll see what happens there. But I think our mission at the company is to bring crypto and financial services in crypto to the masses and to everyone in the world that needs access to financial services, because it's much more efficient.
What would you rather have as an investor? Let's say you were a private investor and you want, part of your capital allocated into cryptos. Would you just buy an ETF, a basket of cryptos? Would you buy, that's number one, option number one. Number two, would you just buy a few of the top cryptos, Bitcoin, Ethereum, and just leave it at that? Or number three, would you actually want your funds to be actively managed?
I think for every investor, has different needs. I can't give advice specifically on what to do, because that's not what I'm here at BlockFi to offer. But what I would say is, and this is what I tell friends and family, is dip your toes in the water by buying a couple of the top cryptocurrencies. Get involved. Once you put some money to work, at least I tend to get more interested and do some more research.
Sure.
I think actively managed funds are definitely further along in terms of the amount of capital you need to deploy. So that's probably a high net worth, private client type of an institutional product at this point.
All right. Now let's talk about BlockFi and a little bit about the products that you offer and your strategy for staying competitive in this space.
Sure. So BlockFi is a financial services company in crypto. So our mission is to bring financial services tied to the blockchain around the world, which we think will democratize finance. On the retail side, we offer wealth management products. So that includes crypto-backed loans, giving USD against crypto, interest-bearing accounts where people can place crypto with us and earn interest, trading obviously from one crypto to another, and we have a Bitcoin rewards credit card in the US, which we're hoping to expand globally. On the institutional side, we have a platform called BlockFi Prime, which is an institutional grade trading platform and financing platform for institutional clients.
Okay. What's your AUM right now?
So in terms of AUM, I think we have about 12 billion. We have about 2 million retail clients, which I would say 600,000 or so are active. On the institutional side, we have about 200 or so active institutional clients, and institutional revenues make up half of the company's revenues.
Well, yeah, BlockFi is one of the largest platforms in the world in terms of what you do. Looking ahead in terms of growth, what are the investment segments or investor segments that you're looking to target and onboard? Is it the retailers? Is it the institutions? Demographics, geography? Can you comment on that?
Sure. Here's what we're planning to do.
Yeah.
We've just launched an offshore platform in Bermuda for our offshore clients. About 60% of our clients are in the US, 40% are international, without doing a lot of international marketing. So that's significant. So the plan is in 2022 and 23 to really ramp up that international business. Obviously, we're here in Paris. I'm based in London. I'm very much looking forward to us engaging with international clients, doing more marketing, getting involved in some more countries. Obviously, we need to make sure we do that in a regulatory compliant way. But the first step for us was to get a regulated entity set up in Bermuda. We can then house the clients in that entity, and then from there, grow the business internationally. We're looking, obviously I'm based in the UK, we're looking at doing something there. Singapore, could also be a hub. And then we'll look very strategically at the other kinds of countries that we want to engage in.
Do you ever foresee a time in the future when a pensioner would come to a platform like BlockFi and say, hey, I want to invest with you guys, I'm retiring next year, give us some crypto?
A pensioner.
A pensioner.
Yeah,
somebody
absolutely.
who's about to
That
retire.
That happens.
I'm 65.
Yeah.
I want cryptos in my account because I see it as a safe asset. When could that happen?
I think it's already happening.
Really?
So we have a whole range of clients that you wouldn't imagine. We have churches that come to put some portions of their treasury into crypto.
Can you comment as to which crypto they're looking for?
So usually it's the top cryptos plus stablecoin. Right. We've had dentist's office. We've had retirees putting crypto IRAs, which are not easy right now to put in place, but some people manage to do it. So we've had all sort of shapes and sizes of clients come to BlockFi.
But mostly it's who investing in the space right now?
I think the dominant demographic.
You mentioned it's the retailers, but yeah, like what's the profile of investors?
I think the profile right now is probably millennial, male-oriented, and one of our co-founders, Flor Marquez, is obviously a woman, and so she's a great example, a great leader to try and get women also into crypto and into blockchain technology.
I don't know if you've seen this article that's been circulating on social media. A group of scientists, I can't remember where, did a study of around 500 participants. They found that the average Bitcoin investor, the people that you described, have narcissistic sociopathic tendencies, and what you call the dark triad personality, Machiavellian, narcissistic, and sociopathic. I don't know where this came from, but this is circulating on social media.
Okay.
Have you noticed that?
I can't comment on whether I've ever met any of those people. They're certainly not here in Paris at the conference today.
All right. Well, thanks very much for speaking with us, David.
Thank you, David. A pleasure.
Speaking with you next time, and thank you for watching our show in Paris. We'll have more for you.
Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.